The last week of May has been one of my best trading weeks this year, especially if we look at it performance-wise. But to be honest, it could have been twice as good if I performed even better. I got stopped out by the pip, I could let winners run a lot more. I took some unnecessary entries, and I basically tell you this to show you that I make mistakes as well. And that even on my best days, weeks and months, there is still room for improvement. So I also closed the month in a 12% gain, as you can see, 11.6 at the bottom, and these were my trades. And this basically goes to show that the rest of the month was pretty much a break-even month. It was, like you can see, a break-even dance. But to be honest, this is the reality of trading. And today, I will show you the trades that I've taken. I will show you why I took them, basically explain that to you. I will tell you what I could improve upon. And last but not least, I will show you the results, of course, that we were able to do on each and every trade. So at the beginning of the year, I really started thinking. And I started thinking by myself, what do I want to be? What do I want to represent? What kind of person do I want to be for my audience? And I realized that I don't want to be like the rest. Just creating content and launching courses only for the sake of making money. And to be honest, that's also the reason why I've been pretty quiet on all socials. As you can see, my last post on Instagram was the 7th of March, except for some reels. Then on YouTube, it has been extremely irregular. My apologies for that. I'm really trying to do a better job with that. And then on Twitter, probably Twitter thinks that I'm dead. So what have I been doing this time? Well, to be honest, I've been focusing on trading. I've been coaching a handful of people. The reason is I want to be a trader that can be an example for all of you. I want to be the person you come to for honest advice, and I will show you how it really is. I won't sugarcoat things, and I will basically give you the facts on what you can expect and really show you the difficulties that you will face while going on this journey. I won't start flexing Lambos on you. I won't start pushing Rolexes in your face. And not that I don't desire these things, as don't get me wrong, I really like fancy cars, fancy dinners, fancy vacations, fancy watches. But really, what is in it for you? What is in it for you if I start flexing these things on you? Motivation? Perhaps that could be something. But what I think is in it for you, or basically in it for the influencers, is a reason to flex and lure you into the courses. And that is not something that I want to represent. So yes, if I buy a fancy car, I will drop a video about it and show you that I did. Because these were always my dreams to accomplish something like that. But I won't start posting every single Instagram story inside of my Porsche, McLaren, whatever, showing the emblem on my screen and then saying, okay guys, if you want to join my course, blah blah blah. That's not me. I don't want to be that person. So I want to provide pure education, and that will be my mission from now on. So your trading coach for today. I've been a trader for 5 years. I've been a trading coach for 16 months now. I think we're pushing 17, 18. And I've been successfully trading with prop firms for the last 2 years. So I've always looked up to the traders that were flashing with these Lambos, with Rolexes, and not even only traders, entrepreneurs, online entrepreneurs in general. And to be honest, that's what's got me hungry for more. I'm not gonna lie. To get more out of life. To get more out of life than just mediocrity. And if I look around me, people are making 2K a month, 1.5K a month, 3K a month. And in Belgium, if you're making 3K a month, in the Netherlands as well, most probably, I think everywhere in Europe, if you make 3K a month, you're rich, right? You're rich. You are doing pretty well for yourself. And not that you can buy a lot with this, but it is an above medium income. And I would say 10K a month is considered rich here. But still, I wanted that 10K a month, as it is considered rich. And also on the internet, it is considered that you're doing well for yourself. So I wanted to get that goal so that then I could buy a Rolex, that I could lease a Lamborghini, whatever. But to be honest, it all changed when I started realizing some things. And everything changed when I realized what life was really about and what becoming wealthy was really about. And let me tell you this, it is not about these ego-driven things like a Lambo or like a Rolex. It's about becoming financially stable and financially healthy. And it's about becoming tank filled with money and assets. So that is what becoming wealthy really looks like. Just building up, creating freedom for yourself, creating the option to do whatever you want for you and your family, and not these, like I said, these material ego-driven things. But now if you want to become successful in trading, you can not focus on the outcome, not on getting that tank with money, not on becoming financially wealthy, not on becoming financially stable even. You have to be focusing on the trades itself. That'll be your task for the next upcoming years, and it will be a very hard one. Because if you start focusing on the outcome, and the outcome in this equation equals money. So the outcome is money, and money will give you basically your desired life, because with money you can do everything, right? Your brain can't determine if this trade or the next trade is going to give you money, yes or no. It only knows that a trade equals money, right? Because if you have a good trade and you win this trade, you get money out of it, right? So it brings you closer to your desired outcome. Now, your brain only sees, okay, trade equals money. It doesn't see good trade equals money, bad trade equals no money, losing money, right? Doesn't see that. It only sees trade equals money. And if you then if you have this balance, right, and you focus more on that money side, you will see that it becomes out of balance, and you will only start taking every single trade in order to get that money. So really, this will literally blind you if you start focusing on that outcome. So if you want to achieve more than this, and if you really want to achieve something with trading, you cannot focus on the outcome, because it will really, really blind you, and you will not achieve anything, and especially not the desired outcome if you are handling trading this way. But more about that on a future video, because it is a really in-depth and I would say interesting. But today we're talking about my trading week. So this is the trading month of May. And you might have some questions why I'm taking quite a lot of trades. I can answer that pretty quickly. It is because I'm basically just putting in every trade that I take over all of these separate accounts. So let's say, for example, I'm taking one position, but I take one position on FTMO, one position on the Virus, one position on Alpha Capital Group. It equals 3 trades. I've been thinking about doing this differently and just starting to monitoring the positions instead of every single trade apart from itself, as I think it will give a wrong view on my performances this way. But let's go over the week in question, and that was the last week right here. So as you can see, like I said, a pretty break-even dance, did not start off that well, had some good trades to make back up for it, but overall it was not that great of a performance. So then on Tuesday, right here, we opened up with a GBP/USD trade. Oh no, we opened up with a EUR/USD trade. And let's go to the screenshots right away. So on the screenshots, as you can see, I expected price to go lower. This is a 15-minute time frame. This is a 1-hour time frame. This is a 4-hour time frame, the daily, and a 1 minute. So I expected price to go lower, and I should have waited for a market structure shift, which we had right here. So that was not that big of a problem, but I did enter quite early. So then what was the problem? Now, my problem is that I did mark out this previous high right here very, very nicely. And this is a rule of mine that I'm always targeting previous highs or previous lows, because this could be a very good point for price to turn around, or maybe just grab some liquidity and move higher from there, to loosen up something else, like for example taking more liquidity or going to a POI that's higher, whatever. So in this case, price used this point to move higher again, and it took out liquidity, took out this liquidity right here, and then moved lower from there. So that is a little bit of a toxic trade that I'm still experiencing in trading. And like I said, I'm going to show you the real world, how it is. Even I lose money, even I have still toxic behaviors in trading that I'm still working on after 5 to 6 years of trading. So my toxic trade is that whenever I see price hit a level like this, reverse, and have a 1 minute market structure shift the other way around, like right here, I still stay in the trade. And purely because, one, I think that I'm right, or maybe I hope that I'm right, and two, I'm just hoping for the best. And this, I think, comes from learning to hold my trades over the years. That I was always, not always, but sometimes I was fearful and I would close early and then price will turn around and go to my take profit eventually as well. And I noticed that it is something pretty hard for me to do, to go around with, dealing with price going to break even, for example, and then turning around to take profit. I have troubles with this. So that's why I let it go to take profit or stop loss basically. And in this case, I should learn how to manage this. I'm assuming this EU trade is the same one. It is. Like I said, I'm doing this on multiple accounts. And then we have this GU one right here. So on GU, also there's another toxic trade that I'm doing lately, is that I'm basically copying my trades on GU and EU as they trade pretty similarly. But of course, like you can see, you get burned twice as hard if you do this. So yeah, a really rookie mistake, I would say. But definitely something that I'm not planning on doing further. So for me, as June has been, now I'm recording this on the 19th of June, and you'll probably see this on like 20th or 21st. You're probably seeing this on the 21st of June or something. I noticed June is a pretty difficult month for me right now. And I noticed that I'm making a lot of, very easy rookie mistakes, so to say. And one of them is just over risking on multiple pairs, taking more positions than I should be doing. So yeah, for me, it is now really going back to the basics, just 1/2s, Euro USD, and that's it. And I really recommend this for everyone, whether it's in a losing streak or just the mental game is a little bit off. Just go back to the basics, 1/2, Euro USD, and bam, just keep on trading there. Or whatever your main pair is. So yeah, nothing really a lot to say right here. Basically the same positions that on your USD reflected. So then we come to the good part, and it is on Wednesday. Wednesday, the first trade was this one right here. Why did I enter this one? I'm not sure if I entered this one. I think, to be honest. Okay, we come back to this. Because I wouldn't enter another trade after winning streak like this, that's why. Okay, screenshots. So right here, we had a continuation lower, and I will start off with the higher time frames first, so that you guys can see where we're coming from. Okay, the 4 hour is the highest that we have. So 4 hour created a new high right here, and we took out, most probably this was higher time frame liquidity, went down from there, market structure shift, and we left open a good fair value gap right here on the hourly, also on the 4 hourly. So then the hourly, I waited for price to come inside of this 1 hour fair value gap, and as you can see, we broke down lower. So then I waited for a 1 minute market structure shift that we had. I don't have a screenshot from that, but that we had right here. Stops above the high, and I targeted basically the continuation lower. And my targets were, I can see where my targets were based on, but most probably this low that we have right here. So that was my target for EU, and that's what I meant with I could have been letting my trades run a lot longer, because I know this was the initial or the overall target. Then this one, GU, this was a GU trade, okay. Did I execute this 3 times? I did execute this one 3 times. Did I really? Okay, I let this one go 3 times. So then on Euro USD, we had 2 positions. We had one right here and we had one right here. So this is the first one that we were talking about now, I guess. And this was based on a 15 minutes. I can remember this one. So what happened is the price tumbled down right here. And as you can see, there were no 4 hour value gaps left. Everything was filled up. But there was a good 4 hour value gap here, 4 hour value gap here. But the overall trend was going down. So I was expecting price to come down as we had taken out liquidity here. And there was basically no reason, I would say, for price to come back up higher. So I was looking for a continuation lower, and this is also what put me in the market. So right here, we saw that price took out this liquidity point on the 15-minute time frame, and we had a break lower. If we go to the, I don't have a 1 minute, if we go to the 5 minutes, you can see we have a break low right here, and we have a market structure shift right here. On a 1 minute, we most probably had a market structure shift, I guess on this one, as this was also my entry. So then stops above the high, and we basically had an immediate continuation lower. So then if I see this one, I remember what happened. This is that second trade. So this is that second trade, and as you can see, I got greedy. My stop loss was not on the right place. My stop loss should have been above here, and then it was all good, right? It was all good. And I'm not now saying this in hindsight. No, it just should have been like that. Stop loss needs above this high, as this high is the one that is secured, because this high did not create a new low yet. So remember market structure, guys. If a high creates a new low, it is a valid one to put your stop loss above. If a low creates a new high, it's a valid one to to put your stop loss below, because it is a strong lower high that is creating new market structure. So in this case, this high did not do that. So for that, I should not trust this high and put my stop loss above here. So this one gets taken out, this one gets respected, and then price moves lower from there. Making this, again, if this one would have been a winner, it would have been a crazy day and an even more crazy month. So then the day after, on Thursday, we have 3 trades again. Let's see here, USD. We're basically taking this the other way. So price now came into our POI. Let's go to this is a 4-hour. Price came into the POI, took out liquidity right here. On the 15 minutes, as we can see, good reaction. We filled up this 4-hour fair value gap right here. Oh wow, do I really only have the 50-minute and the 4-hour? Okay, maybe this one is documented better. Let me see. Yeah, 50-minute and a 4-hour. Okay, that's unfortunate. Anyway, price broke lower right here, and then we had a market structure shift up higher right here. Stops underneath the low, and my target was this small OB that we have right here. But again, I could have been targeting a lot higher. So then we have GBPUSD, and GBPUSD was a very beautiful trade. So GBPUSD, if we look at it on a higher time frame, so the 4-hour moved lower but did not take out liquidity. It just moved to the best place to buy, I would say. Instead of this OB, instead of this fair value gap, very nice price action. Price took out this low first, before then moving up very aggressively, taking out the previous high. This caused for a market structure shift that led us to put our stop loss underneath this low, and this is what it looks like on a 50-minute. Again, I could have been targeting a lot higher, but of course it is very important to just catch a part of the move than trying to catch the whole move. So I'm very, very content with how this went. So that is basically my great trading week, where I was just on the good side of the market, and I've been able to capitalize very great on this. As you can see, my win rate is not that great at the moment, but my return is, right? And that's what it all is about. This goes to show that win rate is not that important if you combine it with the right aspects of risk to rewards. To be honest, I want to see my win rate a lot higher, and that will be my main working point for the next months, as to how can I up my win rate a lot more, how can I be more stable, because I don't really like to chase high returns in order to be profitable. I'd rather have a high win rate, lower returns, and do it this way. Just a more ease of mind mindset to work forwards with. I hope you enjoyed this video. I hope you learned a thing or two from this video on how I saw the trades, what I could improve on, and don't make the same mistakes that I did. And then I will see you in the next one. Bye bye, guys.